Well, I think for our industry, industrial and logistics, it's the biggest individual growth factor. There's about 20% of the leasing that we have done in our European portfolio in the last year, which is related to e-commerce. And there's about 15% growth, which is net growth. So it's not people who are moving from two smaller warehouses in one big warehouse or vice versa. It's really space that is taken away from retail and goes into warehouses for e-commerce. Our research has done a study where you can see that 1 billion turnover in e-commerce creates 77,000 square meters of warehouse space. Yeah, it's 3 times the warehouse space than the storage areas in brick and mortar retail. So it's, for our industry, by far the biggest growth engine. With regard to the Nordics, and especially to Sweden, I think when we compare this with markets like the UK or Germany, we have a very, very big catch-up effect. And we expect, especially in the region between Gothenburg, Malmö, and related also to the future Fehmarnbelt, we see increasingly e-commerce projects that will inevitably be centers for the whole Nordics markets. So very, very important growth factor.
In general, it depends on the fund and the fund's risk criteria, is what we look at. So that's, but in general, we have been investing in retail as well. What we have refrained to do is invest in the major shopping centers simply because they are too big for our funds, or in secondary shopping centers. So it's rather convenience-based, or it is really about the shopping experience, which would be high street investments. So that is basically what we've been looking at. I think there is definitely an impact in e-commerce, and that retail is a very special field of commercial property. Not entirely sure whether e-commerce is having such a big impact as everybody is afraid of. For the fund I'm responsible at, it is really about defensive assets. So it's a core fund. It's supposed to be about quality and location and sustainable income. That's basically the key factor. So we don't really look too much into big refurbishment projects, value add type of deals. That's typically not what we do for this particular fund.
So when it's secondary, you're really looking at that as an income play,
yes,
rather than anything else?